Employee federal employment taxes. The federal employment taxes that may need to be withheld from payments to workers can vary depending on how the worker is classified. In this lesson, we will review which taxes may need to be withheld based on the employee classification and how to calculate those deduction amounts to determine the net amount to be paid. The taxation requirements for payments to workers varies depending on their classification. Let's preview each worker type to learn how their payments should be taxed. Common law employee. An employee is the most common type of worker and is generally subject to all employment taxes. The exception would be if an employee is exempt from a tax for various individual reasons. These are the federal taxes that you must withhold from payments to employees. Federal income tax, also known as FIT, and FICA, which is Social Security and Medicare. When it comes to employment taxes, there are no classes of employees. Therefore, these taxation rules apply the same whether you are a greeter at a discount store, the company president, or a store manager. Independent contractor, IC. As an employer, you generally do not have tax responsibilities for independent contractors unless they fail to provide their tax identification number, TIN. You can request the TIN using Form W-9. If they do not provide it, you are required to withhold 24% for backup withholding to ensure that federal taxes are collected. This process helps ensure that taxes are paid, especially if the contractor intends to avoid reporting their earnings. Statutory employees are classified as employees by law, but their payments are not taxed like regular employees. Generally, FIN is not withheld, and FICA is only withheld if specific conditions are met. These workers personally perform their tasks, do not invest significantly in their equipment, and work continuously rather than on single projects. However, for transportation, a worker can own a truck used for deliveries. If they make those deliveries regularly, FICA should be withheld from their payments. Statutory non-employee. You generally have no employment tax responsibilities for statutory non-employees. These workers are considered self-employed for federal tax purposes. Outlined below are some conditions for specific job categories, direct sellers, and licensed real estate agents. Payments are related to their sales, not the number of hours they work. Services are provided under a written contract that they will not be treated as employees for federal tax purposes. Companion sitters, not employed by a third-party service agency. If these conditions are met for these job categories, then you have no employment tax responsibilities for these workers. They are considered self-employed and are responsible for their own taxes. In summary, for the common law employee, the employer must withhold all federal employment taxes. For the independent contractor, the employer withholds no federal employment taxes. For the statutory employee, the employer withholds FICA, but not FIT. And for the statutory non-employee, the employer withholds no federal employment taxes. To understand how Social Security and Medicare taxes are calculated on your pay statement, let's first break down the key concepts. Then we'll be ready to apply them to the calculations. Social Security. The tax rate is 6.2%. And yes, there is an annual taxable wage limit. Note, since Social Security and Medicare are components of FICA, it is best to calculate their taxes separately due to differing rates and thresholds. Medicare. The tax rate is 1.45%, and there is no annual taxable wage limit. Again, it's important to note that Social Security and Medicare are part of FICA, so it's advisable to calculate their taxes separately due to different rates and thresholds. Additional Medicare has a tax rate of 0.9% on taxable wages over $200,000. There is no annual limit. Taxable wages. If an employee has deductions that are pre-taxed for FICA, such as Section 125 cafeteria plan health premiums, reduce their gross wages by the deduction amount to find their taxable wages. Do not calculate FICA on non-taxable earnings, such as an expense reimbursement. For example, $1,000 gross pay minus $100 for medical and minus $50 for dental leaves, $850 as taxable wages. Form W-4, also known as the Employee's Withholding Certificate, is needed to calculate withholding for federal income tax, or FIT. Because each person has unique tax obligations, your completed Form W-4 is used to calculate the FIT to be withheld from your wages. Now that we have reviewed the key concepts of FICA taxes, let's walk through a comparison of two employees, Janice and Morgan. They have the same taxable wage amount, but because their W-4 forms differ, their FIT withholding amounts will differ. Let's examine the details of the entries that Janice and Morgan each filled out on their Form W-4. Since Janice is single, she selected the single or married filing separately box. Because she only has one job and no other income, Janice does not need to do anything in Step 2. In Step 3, Janice enters nothing because she does not claim any dependents. Also in Step 4, Janice enters nothing because she has no other deductions. Since Morgan is married and filing jointly, he selected the Married Filing Jointly box. Morgan has a working spouse, therefore, in Step 2, he selects the box in line C, indicating there are 2 jobs in his household. Morgan has 4 dependents, so in Step 3, he claims $2,200 for each child under the age of 17. This totals $8,800. He has no other dependents, so he enters $8,800 on line 3. Morgan has additional deductions, and he wants to reduce his withholdings, so he claims $19,600 on line 4B. For standard, per payroll, federal income tax calculations, your employer can generally use one of 2 methods to calculate your withholding amount. 1. The wage bracket method is typically used by employers that calculate their payroll manually since it contains a series of standard tables found in IRS Publication 15T and requires little manual calculation. 2. The percentage method is the method used by automated payroll systems, such as ADP. It can also be used by employers that calculate payroll manually, but is more complex and requires more manual calculations. The percentage method is considered more accurate in calculating the tax amount. Regardless of the method your employer uses, the information provided on your Form W-4 will be used in the calculation. The wage bracket method uses standard IRS tables that apply rounding logic, so the amount is not as precise as the percentage method, which calculates to the cent. For example, Lori has $1,758 in taxable wages this biweekly pay period. Her W-4 indicates she is single with no other entries. Using the wage bracket method, Lori's FIT withholding is $138. Using the percentage method, Lori's FIT withholding is $138.54. If your FIT withholding is always a whole dollar amount, chances are that your employer uses the wage bracket method to calculate your FIT. Both methods are considered accurate. The wage bracket tables only go to a limited wage amount. If your earnings exceed the top wage amount listed on the table for your pay frequency, your employer will have to use the percentage method to calculate your FIT withholding. In the last lesson, Earnings, you learned about bonuses and commissions that are extra or supplemental pay. Federal income tax on supplemental earnings is typically calculated using a supplemental tax rate, rather than the standard tax table methods referenced above. There are 2 supplemental tax rate percentages. The rate your employer must use depends on the amount of supplemental earnings you have been paid so far this year. tax percentage you can expect to pay if you are paid supplemental wages. The first $1 million in supplemental wages will have federal income tax withheld at a rate of 22%. For example, if you have no supplemental wages and receive a bonus of $1,000, you will have $220 withheld for FIT. $1,000 times 22% equals $220. Supplemental wages over $1 million will have federal income tax withheld at a rate of 37%. For example, if you already have $1 million in supplemental wages this year and receive a bonus of $1,000, you will have $370 withheld for FIT. $1,000 times 37% equals $370. Let's practice calculating FIT on supplemental earnings using the two supplemental income tax rates. Adriana is scheduled to receive her first bonus of the year for $5,000. How much will be withheld from this bonus for federal income tax? If you guessed $1,100, you are correct. Because her supplemental earnings so far this year are below $1 million, Adriana will have $1,100 withheld from her bonus of $5,000.